On Friday, December 19, 2025, Asian stock markets surged, delivering a much-needed boost to investors who had weathered a turbulent week. The mood across trading floors was noticeably brighter, as indices across the region posted significant gains, signaling a strong finish to what had been a challenging period for global equities. From the bustling financial hubs of Tokyo and Hong Kong to the vibrant markets in Sydney and Singapore, the rally was broad-based, with nearly every major index closing in positive territory. This widespread momentum reflected renewed optimism among investors, who had been rattled by earlier volatility and uncertainty. The main catalyst behind this impressive turnaround was a sharp rebound in technology stocks. After several sessions of heavy selling, tech giants led the charge, reversing earlier losses and restoring much-needed confidence to the market. Investors responded enthusiastically, snapping up shares in both established firms and promising startups. Traders, relieved to see green after days of declines, drove gains higher throughout the session. The positive sentiment was palpable, with many market participants expressing hope that the worst of the recent downturn was now behind them. This rally underscored the market's inherent volatility and how quickly sentiment can shift, especially when both global and regional news events align. Analysts noted that while risks remain, the day's performance demonstrated the resilience of Asian markets and their ability to bounce back from setbacks. The tech sector's recovery was pivotal, signaling that the recent sell-off may have been overdone and offering hope for the weeks ahead. Many experts believe that strong fundamentals in the technology industry could continue to support further gains, especially as innovation and digital transformation remain key drivers of growth in the region. The day's optimism was fueled not only by a tech rebound in the US, which provided a positive lead for Asian investors, but also by a major policy announcement from the Bank of Japan. The central bank's decision to maintain supportive measures reassured markets and set the stage for a memorable close to the week, leaving investors hopeful for continued stability and growth in the days to come. A major focus was the Bank of Japan's decision to raise its benchmark interest rate by 0.25%, a move widely anticipated by markets.
Economists had predicted the hike, so investors had already adjusted, preventing any market shock.
The BOJ acted in response to persistent inflation, with consumer prices staying above its 2% target.
Fresh data confirmed inflation remained high, giving the BOJ the final push to act.
By raising rates, the BOJ aims to cool spending and bring inflation under control, while signaling that further hikes are possible if needed.
Governor Ueda's press conference was closely watched for hints about future policy, as markets looked for clarity on the central bank's next steps.
This communication is crucial for managing expectations and ensuring smooth policy implementation. The Bank of Japan's long-awaited rate hike, while widely anticipated by analysts, still sent noticeable ripples through global financial markets. Even when a move is expected, the reality of a central bank shifting its stance can trigger immediate and sometimes dramatic reactions across asset classes. Investors and traders around the world watched closely as the news broke, knowing that Japan's monetary policy has far-reaching implications for currencies, stocks, and bonds.
The yen, which had been under pressure for months, strengthened slightly in response, a classic reaction to higher interest rates, as investors anticipated better returns on Japanese assets. This move was closely monitored by currency traders, who quickly adjusted their positions, leading to increased volatility in the forex markets. The yen's appreciation, though modest, signaled a shift in sentiment and forced global investors to reconsider their strategies involving Japanese assets. Meanwhile, Japanese stocks rallied, buoyed by the clarity and confidence provided by the BOJ's decision. For months, uncertainty had weighed on the market, but the central bank's move offered a sense of direction. Investors welcomed the end of speculation, and the Tokyo Stock Exchange saw a surge in activity as both domestic and international buyers jumped in.
The removal of uncertainty was a relief for many, sparking a rally in equities and prompting a broad reassessment of investment strategies. This was especially true for those engaged in the popular yen carry trade, where investors borrow in yen to invest in higher-yielding assets elsewhere. With the BOJ signaling a new era, many had to rethink their risk exposure and portfolio allocations.
The BOJ's move also highlighted a growing policy divergence from the United States, where the Federal Reserve is now considering rate cuts. This contrast between tightening in Japan and potential easing in the US is creating fresh dynamics for global investors, who must now navigate a more complex landscape of interest rate differentials and shifting capital flows.
This divergence is quickly becoming a central theme in global markets, influencing not just capital flows, but also currency rates, bond yields, and investment decisions worldwide. Investors are now recalibrating their expectations, aware that central bank policies are no longer moving in lockstep.
The BOJ's decision was more than just a local event. It marked a significant turning point in global monetary policy. Central banks around the world are watching closely, as Japan's shift could influence their own strategies and the broader trajectory of the global economy.
Throughout the day, investors and analysts spent hours digesting these shifts, poring over data and market signals to understand the full impact. The mood was one of cautious optimism, mixed with a recognition that new risks and opportunities were emerging. As the dust settled, it became clear that Japan's move could reshape the global economic landscape, setting the stage for a new chapter in international finance. On the day of the BOJ announcement, Japan's stock market stood out in Asia.
The Nikkei 225 jumped 1%, and the broader Topix rose 0.9%, reflecting strong investor confidence.
Despite Friday's rally, the Nikkei was still set for a weekly loss of about 2.6%, highlighting the anxiety leading up to the BOJ meeting.
The rally was a classic sell the rumor, buy the fact scenario. Uncertainty drove selling earlier, but clarity brought buyers back.
The market's direction now hinges on how Japan's economy absorbs higher rates, with future data on earnings and spending in sharp focus.
The BOJ's data-dependent approach means volatility could persist, making the coming weeks crucial for Japanese stocks.
Investors are watching closely for signs of how the new policy will play out.
While Japan may have dominated the headlines this week, the impact of Friday's rally was felt across the entire Asian region. Markets from Seoul to Sydney experienced a wave of optimism, even as the overall weekly results painted a more nuanced picture. Each market responded differently, reflecting the unique economic and sectoral dynamics at play in Asia's diverse economies.
In South Korea, the Kospi index managed to rise 0.8% on Friday, largely thanks to a rebound in tech shares, which have been under pressure in recent sessions. However, despite this late-week surge, the Kospi still closed the week down nearly 4%, as heavy selling earlier in the week weighed on sentiment. Investors remain cautious, watching global chip demand and local policy signals.
Over in Hong Kong, the Hang Seng Index climbed 0.6% on Friday, buoyed by selective buying in financials and tech. Yet, the index still ended the week down 1.5%, as ongoing caution over China's economic outlook and property sector woes kept investors on edge. The market's volatility reflects both global uncertainty and local policy shifts.
Mainland China's markets showed more stability compared to their regional peers. The CSI 300 and Shanghai Composite both posted gains of 0.6% on Friday and finished the week largely flat. This resilience was underpinned by steady performances in consumer and industrial sectors, as well as supportive government signals aimed at boosting confidence.
Australia's ASX 200 gained 0.5% on Friday, weathering the week's turbulence better than many of its tech-heavy peers. The index benefited from strength in mining and financial stocks, which helped offset global volatility. Australia's relative stability highlights the importance of sector composition in navigating uncertain markets.
India's Nifty 50 rose 0.5% on Friday but still closed the week down 0.9%. The market's performance reflects ongoing concerns about domestic growth and inflation, as well as global risk sentiment. Investors are closely monitoring economic data and policy developments for signs of recovery.
Singapore's Straits Times Index traded flat, underscoring its defensive nature amid the tech-driven volatility seen elsewhere in the region. The market's stability is often attributed to its strong financial sector and conservative investor base, which help buffer against global shocks.
The region's mixed results this week highlight how local factors, sector composition, and policy responses shaped each market's reaction to global events. As Asia's economies continue to evolve, investors are reminded of the importance of understanding the unique drivers behind each index's performance.
The tech sector's rebound powered Friday's rally across Asia, reversing a week of heavy selling.
Tech stocks are a major force in markets like South Korea and Taiwan. so their recovery lifted entire indices.
Earlier losses were driven by profit-taking and doubts about 2026, with high valuations making tech vulnerable to a correction.
Selling snowballed midweek, but the tide turned after a strong overnight rally by US tech giants.
US gains often ripple through Asia, as many Asian tech firms supply American companies.
The Nasdaq's surge restored confidence, prompting bargain hunting in battered Asian tech stocks.
Investors saw the dip as a buying opportunity, fueling a sharp recovery.
The week's roller coaster showed tech's resilience and its central role in global markets. Asian markets are closely linked to Wall Street, and Friday's optimism started with a strong US session.
The Nasdaq's gains, driven by softer US inflation data, set a positive tone for Asia.
Lower than expected CPI numbers fueled hopes for Fed rate cuts, making stocks more attractive.
Tech stocks, sensitive to interest rates, led the US rally and inspired similar moves in Asia.
Economic news from Washington can quickly impact investor behavior in Tokyo or Seoul.
The global chain reaction was clear. US data boosted Wall Street, which in turn lifted Asian markets.
S&P 500 futures held gains after the close, giving Asian traders extra confidence.
The day's trading was a vivid example of how interconnected global finance has become.
While the soft US CPI data sparked a rally, some experts urged caution, noting possible distortions from a recent government shutdown.
Analysts warned the November report might not fully reflect underlying inflation trends, making the upcoming December data even more important.
2 months of soft inflation would confirm a real trend, but a rebound could quickly dampen optimism.
The debate highlights the risks of reacting to single data points and the need for confirmation from future reports.
Investors are celebrating but remain cautious, knowing the story isn't complete.
The November data increased hopes for Fed rate cuts, but nothing is certain yet.
That's why every new economic release is being watched so closely.
This week's events show how central bank policy and global news drive markets.
The BOJ's well-telegraphed rate hike and hopes for US rate cuts fueled rallies, underscoring the need to track monetary policy.
The tech sector's wild swings highlight the importance of staying calm and focused on long-term goals.
Short-term volatility is often driven by temporary factors, making discipline and perspective essential.
Global markets are more connected than ever. A US inflation report or a BOJ decision can move stocks worldwide.
Understanding these links is key to building a resilient portfolio.
In summary, Friday's surge was driven by tech's rebound, Wall Street's lead and relief after the BOJ's move, a reminder to stay informed and steady through market ups and downs.